Good afternoon, guys. On Saturday, the 20th of February, 2021, DraftKings Incorporated. I love this company. I love this stock. I like this chart. And I am a customer. That's right, I said it. I'm a degenerate daily fantasy sports customer. I'm a high roller. I usually go in for the 25-cent tournaments. But if I'm feeling really brave every now and then, maybe going all in on some dollar slates. Oppenheimer has come in and raised the price target on DraftKings from $65 to $80. Nice little upgrade. Lots of buyers pushing sellers back on Friday. Presumably on the announcement, or maybe in front of the announcement, but up to 80 it's going. Money Stream has been flat for a while and is starting to lift upwards on DraftKings. Balance of power. Back on January 6th, 7th, and 8th, there was accumulation occurring in balance of power, but then it flipped into retail hands where it has been since mid-January up until this Friday. We're well above the 50-day moving average and miles above the 200-day moving average. Volume on Friday was right at its 50-day moving average. On DraftKings, Spot Gamma is a tool that I use every single day. Spot Gamma tracks option activity, and these days it's the option market that is wagging the tail of the regular stock market. Spot Gamma has, of Friday, it has the hedge wall on DraftKings at the $60 strikes. They also have the key gamma strike on DraftKings at 60, the key delta strike on DraftKings at 50, and of course, as we mentioned, the hedge wall itself at $60 on DraftKings. Now, what do these terms mean? The hedge wall is the strike where the model detects a largest change in gamma. This is usually a place that will mark pin and pivot areas on a common stock. The key gamma strike, as we said, is 60. Key gamma strike at 60 is where volatility will increase or decrease, and the key delta strike as of Friday on DraftKings was down at 50. The delta strike is where there is a large amount of hedging that is linked to this stock, particularly as it goes in the money. And at the close on Friday of $61.75, DraftKings is way in the money over that delta strike, and now it's over the key gamma strike and the hedge wall. This means that on a pop on Monday, you could probably count on a pretty good squeeze in DraftKings because the dealers that wrote the call options now have to start buying the common stock to hedge against the options. Back over to our daily chart, and let's try to define a price octave so we can go in and get some Diatonic price targets. Let's take that low from, we're going to grab the low from last October 30th, down at $34.90 on DraftKings. We'll take it up to the high of February 8th, a fine day, my birthday. February 8th, the high was $64.78. This is how we're going to define our price octave. Let's get over to the flux capacitor and fire up some price targets. Flux capacitor, our Diatonic price target calculator. We're talking about $34.90, the October 30th low, the February 8th high, up at $64.78. Let's crunch the Python kernel. The close on Friday at 61.75 was at the very end of the major octave we just defined. So getting through that 64.78 will take us into a higher octave. The first area of resistance, $68.48. 72.22 would be a positive shock area, which would send us to the next resistance point of 74.70. And ultimately, if we hit that Oppenheimer price target, final resistance on DraftKings for the short term would come in at $84.65. On the way out here, too, I would call first support on DraftKings the low from Thursday the 18th, right down on this lower shadow. Below there, $61.04 is good support. This low was in the $56 area, and there's further diatonic support at $54.82. I am King Cambo, smoke 'em if you got 'em, and that's how I roll on DraftKings.